Hello, everybody, and welcome to Unlocking the Power of Cloud-Based Automated Trading Strategies. Can everyone hear me out there? Respond quick yes if you can all hear me. Ian, what do they got? Anyone saying they can hear me?
It seems like people aren't too chatty today, but
There we go.
There we go. Sounds good. Cool.
Good, great. Well, let's get started. First and foremost, Ian?
Yeah, absolutely. First and foremost, obviously, let's talk about risk. We're going to be discussing some educational material here, and it's around futures. So derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And the opinions expressed are solely our own opinions here and do not reflect the opinions of EdgeCair or the opinions of our guests. The information provided in this video is intended for educational purposes only and is not a recommendation to trade.
Thank you, Ian.
You bet.
So, what is our agenda for today? We're going to start off by going over some details on what automated trading strategies are with Scott Andrews and Matt Ratliff of InvestAQuant. We'll then go into cloud-based automated strategies, automated systems, discuss what those are, and then we're going to give an example of what an automated system looks like. Machine learning and trading, AI is it's a top topic these days, so we're going to go over what machine learning is in automated strategies, and then we're going to do a Q&A. And we have a giveaway. We're going to announce that at the end of the webinar. If you have followed us for a long time, you know that we're going to have a cool looking picker wheel that'll go around in a circle, and the winner will be chosen that way. So, who is EdgeCair? EdgeCair was launched in April of 2020. We have 40 plus years of combined brokerage experience. We're experienced in managing trading systems on accounts. We've been doing this for quite some time now. All of our brokers are traders in some shape or form. We're focused on serving the active trader and investors. And we have a 5-star customer rating on Google, which we're very proud about. And let's bring in our guests for today.
Yeah, let's bring in
Matt.
Yep. So Scott and Matt, let's bring you guys in here. Thanks for joining us.
Hey guys, thanks for having us.
Of course.
All right, let me give a quick introduction of InvestAQuant. So we've been around since 2008. Many of you traders may remember Master the Gap, and that was ran by Scott Andrews here, who's with us as well, which focused on trading gap-based strategies using statistical methods to enter those strategies, calling them out ahead of time. So, trading them very mechanically. That started in 2008. We've been around since then. We took on client capital back in 2015. We had clients that were watching those signals and wanted different ways to participate. So was able to actually raise several $1 million from people who were trading our strategies back in the day to expand our offerings and create more auto trading like programs. We've been doing algorithmic strategies for about 15 years. We also dabbled into the CTA side as well. Had quite a bit of success there. Was named the best up and coming CTA back in 2018. And we've since kind of gone back this route where it's just a easier way to interact with all the clientele that we want, and we don't have to focus specifically on the super high net worth individuals that we had to do with the CTA. Now we can interact with everybody. So that's kind of a little bit of a background about InvestAQuant. Been around for about 15 years, trading algorithmic strategies based on statistical studies.
Thank you for that. So, we've been working with InvestAQuant, man, we've known you guys for quite some time now, and we're very honored to have you on board to talk about automated trading strategies, trading systems, how you create them, the pros and cons in all shape or form. So first and foremost, what is an automated trading system?
Well, I'll take that one. It's just like you might imagine, or similar to what you might imagine, in that it's a program, right, that enables a computer to trade essentially as you would as a discretionary trader, but everything's automated. So from monitoring the markets and price action to identifying attractive trading opportunities to actually executing buy and sell orders, it's that entire process, entire continuum automated for you. That's how I like to think about it.
So, like the slide says, what would you consider for an investor that may be watching this show? What are some pros and cons of an automated system to kind of help them make a decision that if maybe this is right for them?
Yeah, first, let me just give a sort of a caveat. Not here to convince everyone that you should be doing automated trading. Just trying to educate folks on the sort of the pros and cons and the advantages of doing so. And it's not an or decision in my mind. It's an and decision. For years and years, I traded both discretionary and fully automated. I've evolved over the years for a whole host of reasons, some because of the benefits I'm about to share with you. Because of the many benefits of automated, but it really can be an or for many people, even regardless of how much capital you may have to work. So the pros are many. First off, it's automated, so it's going to be faster than anything you could do manually, right? Even if you're the fastest trader, the fastest clicker out there, it might take you a second from the time you decide to make a decision to execute a trade and actually execute the trade, right? By clicking the button. Well, when our algorithms determine that a trade meets our criteria, it executes that trade in milliseconds. So think, let's see, what's 0.1 milliseconds is what? It's 1/10 of a second. I'm gonna screw that all up. But it's way faster.
I don't think I could blink faster than that.
Yeah, I think I just blew that actually. But it gives you a huge advantage, right? So everyone knows there's not an unlimited amount of supply at the price that you want to get in when you're trading, right? You're competing with all the other traders out there. So the name of the game is to be fast, and automated trading is as fast as you can essentially get. Because it's fully automated, it has fewer errors, right? You can have coding errors, but when you're trading robust algorithms that have been vetted and QC'd, the errors are far, far fewer, very rare actually, compared to what a discretionary trader would do on his own, right? And we all know that it certainly seems like anytime you make an error, it costs you money, right? It rarely works out to your advantage. Sometimes, but certainly most of the time, it's going to cost you money.
I know I've had more than a few misclicks, Scott. So
yeah, fat fingers and all, right? And the heat of the moment, because you're trying to be fast, right? Because you know what I just said is true, that you don't want to be at the end of the queue for your limit price. So those are two advantages, but there are a lot of other advantages too. In that, and these are probably the biggest advantages, frankly, is that you can avoid the emotional elements of trading, right? As a discretionary trader, we're all familiar, and I've heard Morad talk about these as well, the many, many different cognitive biases, cognitive flaws, things that hinder us in our decision-making, right? So there's a host of them. Aversion loss, right? Loss aversion, you don't want to have another losing trade. You maybe hesitate a little bit, and then you miss the entire trade, right? You don't have that with the unemotional mechanical system. Anchoring, maybe you a friend or a trader that you really respect gave you a tip that he really thought there was a long bias to the market today or a short bias to the market today. You sort of get anchored around that concept, and then as the day unfolds, you're ignoring those factors that maybe show that's not likely to be, and you're anchored on that one idea that you had from the beginning. Gambler's fallacy, right, where you think you can't possibly have a sixth losing trade in a row. You're due. And in reality, you're just trading the wrong strategy, maybe in the context of the market. I could keep rambling on, but I won't. Confirmation bias, right? It goes on and on and on. You avoid all of that, right? Automated systems don't worry about those types of things. They're unemotional, so they're superior in that regard, and allows you to objectively trade edges that you wouldn't be able to do otherwise, I think, because I'm a pretty passionate guy, and I can tell you, I spent many years in the trenches actually executing computer-generated signals. That's how I started. But the manual execution really tripped me up. In fact, many of you probably heard me, or some of you have heard me share in the past that I traded side by side with our automated systems for 6 years. And I'm going back now 12, 14 years ago when I tried this little project in front of my clients, and I showed them how I was going to beat, and I generally tried to beat because I thought I could, our automated systems, because they were very simple at the time, very simple systems. And over a 6-year period, I beat them 1 year. And that's a true story. And it's not that I'm some terrible trader. I know exactly how the systems are coded. But anyhow, I gave up after that. I said 6 years is enough of embarrassing myself. So, and I wasn't always losing money by any means, but I wasn't doing as well as the pure systematic automated execution of our edges.
Yeah, and Scott, just kind of chiming in here real quick. Some of that is, I mean, you can execute an edge really well, but there's sometimes you just got to be away from your computer and you're not able to physically do it. Yep. So there's other things like taking a vacation and that sort of stuff that automated trading allows you to do that you just can't do otherwise.
I was going to say that as well, Matt. I mean, there's a lot of times during the day where there's no way I could put enough attention to the market and every price move to try to capture any, even if the trade meets my criteria, that doesn't mean I'm going to be in front of the screen to trade it. Right. So, yeah.
Yeah. I'm going to take the opposite side of it and just say a con here would potentially be, it kind of falls in the emotional piece of this puzzle, which is now they're hands off. Now they can't get into the market and say, you know what, I do want to trade. So that emotional block where it's, I want to have control, but now I have to give it to somebody else could also be a con for automated systems. But it kind of goes hand in hand with the emotional side, which is, I mean, I've been a broker. I've been in the brokerage industry for, how long have we been doing this? Long time. And I've definitely have seen the emotional side of trading, and it can be tough.
Yeah. Well, when possible, we encourage everyone, and I know you guys do as well, to set up 2 sub accounts, right? You can have your master account, have one account that's doing an automated system or automated program, and then you do discretionary trading in the other account. So you get sort of the best of both worlds. But you actually reminded me of really the biggest con in my mind of automated systems is, in order for the automated system to select the trade it's going to execute, it has to have rules, right? And those rules traditionally, historically, 99% of the programs out there are extremely fixed and rigid, right? And you might, in some ways that is a positive, right? Because they should be highly researched, statistically based and so on, but you're still missing out on opportunities. And that holds people back, I think, sometimes from wanting to take on systems. And frankly, just being brutally honest, it is so hard to create a well-designed, fully automated system doing back testing without the concept called curve fitting, right? Fitting your results to what's worked best in the past, which may or may not have anything to do with how they may work in the future. So many, right? We all know the garage salesman, automated system guy who's selling you his system that he built that has this incredible back-tested curve, and it's just printed money left and right. You sign up for it over at Collective 2, and it never makes a penny. It just goes straight down, and you lose money over and over and over. So that's the problem. These automated systems, how in the world do you possibly mimic the expertise of someone like a Morad, right? What's in his head? That's the big challenge.
Yeah.
So there are ways to do it, and I'll get to that a little bit on sort of the solution. But that's something that struck me as we were talking.
Yeah, that makes complete sense. Which I guess it's a good segue into the next question, which is, are all systems the same?
Well, of course not. There are many horrible systems that should never be traded, that get sold and offered to the markets, and there's some great ones, and a lot in between, I guess. So they're certainly not, because execution is fairly commoditized, right, among the different brokers and the different types of orders and so on. So that's not the hard part. Monitoring price actions not hard. But those rules, right? That's where the variance is. And I'm just going to cut to the next bullet. What separates the good ones from the poor ones? The good ones are adaptive and highly nuanced, right? And if we can, I'll describe that in greater detail on a later slide.
Yeah, absolutely.
Yeah, definitely.
Well, let's move to the next one. What do we got? Ian, you want to take this one?
Yeah, definitely, because I'm actually curious about this one myself. What so cloud-based automated system. What are cloud-based trading systems or automated systems?
When you have an automated system, most people probably think of a computer that they've downloaded or created. Some of the big common names, y'all know them: TradeStation, Ninja, Trader, and so on. These guys, and I don't stay up to speed with them, so I might be dated in my information. But typically, the strategies, when I used TradeStation and had them before, I created strategies that were stored in my TradeStation app on my computer. Right, I had to be at my computer to turn it on. I had to regularly update the computer to make sure it was working properly, how to maintain connectivity. I had to have a generator backup, the whole 9 yards. If you're really serious about trading, that's what you have to do if you're relying upon a single computer. Well, that has all kinds of problems. So with the advent of not just the internet, but with the amazing bandwidth now, right, that's available through, even your phone, right, you can use your phone as a mobile hotspot and even trade. I've done that. The bandwidth is so large now that you can literally create and store and host is the word, your algorithms, your trading strategies in the cloud. And the cloud is just a phrase, I guess, for describing what I think of as giant server farms. There are actually some computer connected to massive bandwidth on the internet somewhere in the world, and you've hosted or leased space, I should say, from a hosting facility. So the cloud is meaning not at home, right? So, and there are huge advantages of that, right? So if you don't have to store your computer or your algorithms on your computer, you don't have to be at your computer, right? You can access it from your phone. You can be at someone else's computer and access your system to activate it. They give you also the ability that's probably equally strong in that you can do everything on demand with the cloud now. Everyone's probably heard of AWS. Well, AWS is huge, Microsoft. There's tons of players out there that offer these cloud-based server facilities, but you can literally get on-demand processing power. So in peak times a day when a lot's going on the market at the open or the close, for example, you can literally ratchet up the processing power. Some of them even do it dynamically for you without having to do anything yourself. So you can sort of match the market needs that you have through the cloud. You also get on-demand storage, right? So when you need more storage for storing data, we use an incredible amount of data. It can happen all dynamically. So it's all easy. It's not anything, you're not limited by anything on your own PC or your own laptop.
Yeah. Is there any challenge? I know it's on the slide too, but with a cloud-based housing it on the cloud and storing it there versus, I don't know if you'd call it the old school way or whatever of having it locally on the machine.
Traditional.
Yeah, traditional. Yeah.
Yeah. I think it's because the biggest one is cost. You can define cost however you want. It's not necessarily expensive to use the cloud these days, but there is a significant time element in creating your strategies and enabling through the cloud, right? There's more security requirements involved. That's sort of the first one for me that, that's one that sort of keeps me up at night. We have unique edges and I don't want anyone accessing them through the cloud, but that's probably the biggest challenge, worrying a little bit about security and just the cost, the time cost, the coding, the complexity of doing all that makes it probably out of reach of a lot of individual traders. I certainly didn't know cloud-based trading until I hired a team of developers. So
interesting.
Matt, you got anything to add there?
Yeah, I think the cost is definitely the biggest drawback to it. But the benefits do certainly outweigh it, and the fact that you don't have to worry about your machine, the dog kicking the machine or something, and turning off in the middle of a trade, and you're left naked in something. So the benefits certainly outweigh it, and the costs aren't super prohibitive.
That makes sense. Yeah. Max, you have anything on that?
Well, someone mentioned here that it seems like they're agreeing with you, where running a cloud-based system on a VPS is cost-effective and easier than running a dedicated system at home, as an example. That seem fair?
Yeah.
You just have to have the sort of the technical know-how. I'm a hacker. I'm not a professional coder or developer. So that was beyond my personal capabilities pretty quickly.
Yeah. Well, I think this kind of leads into just what an example of an automated system is, which is our EdgeQX program that is powered by InvestiQuant. And, I wanted to just bring this up and show this as maybe we can talk a little bit about what is this a cloud-based automated strategy? What goes into something like this in terms of the actual automated system itself, as much as you can kind of tell us.
Yeah. This example that we're looking at here is the EQX program. It trades the S&P futures, specifically it day trades the S&P futures. So it's in cash every single night by the close of the regular trading hours session. And what it is a collection of different types of strategies, so that it creates, you can almost think of it as a portfolio of strategies. And there's a reason why we do that. And that has to do with kind of making the ride smoother when you think about your returns by putting a bunch of different strategies together. So this is a collection of S&P strategies. They trade long and short. There's multiple contracts that are traded on some days, and on some days there's only a single contract. It just kind of depends on what the market is giving us for the day. And they've got different types of strategies in there. Some are looking for smaller setups, smaller stops and targets. Others use bigger stops and targets. Some will try to hold all day long, and you put them all together and you come up with something that works pretty well. You can see here, this is the last year of performance here. I went live with it in September at EdgeCair, and since then it's up about 22%. And if you look at the S&P during that same time period, it's up just shy of 15%. So it's outperformed the S&P by about 50% in what I would consider not perfect conditions for the market or for the program. These programs tend to do really well in volatile markets, which if you're a discretionary trader, which I imagine most of you guys that are joining us here today are, that the setups in volatile markets tend to just be more plentiful and often better than what you'll get in quieter, low volatility type markets. So this one can take advantage of all different types of markets, and we've kind of seen all different types of markets over the past year. We've seen some strong weakness with a lot of volatility, and we've seen a pretty strong bull rally this year, and it's kind of outperformed over the whole during that entire time period. And that's something also that's worth mentioning when you're looking at your strategies and that sort of stuff, is don't pay too much attention to any given trade, any given month or whatnot. There's certainly randomness to all types of strategies, automated strategies as well. But if you kind of zoom out and look at the big picture, that's where the magic really happens. And you can see with the performance here, outperforming the S&P when it's doing quite well is something to be proud of.
Yeah. Same thing goes for discretionary trading too, right? Like if you're someone who's really been at it for a long time trading discretionarily, you're probably not looking at your day to day. You might be counting your errors and things like that, but overall, that it's a long-term game, right? And so
exactly,
you want to have consistency over the long haul.
Yeah. It's a marathon. It's not a sprint. And obviously past performance is not indicative of future results, but we've been pleased with the program, and it's been fun managing it.
Yeah.
Are you able to kind of dive into potentially just the more of the call it the cloud-based, or what's inside of it? I'm not saying the secret sauce, but more so what did it take to build something like this?
Can we maybe go to the next slide and talk about?
Absolutely.
That's a good idea.
That's a good segue.
It leads into our segment for Scott.
So the big weakness, as you recall, I mentioned with automated trading, and when we were talking about this earlier today, it struck me it really does fit well with what we're talking about here, is that you're limited by the rigidity of rules, right? How do you identify and define market context so that you can pursue strategies in a wide range of market environment, right? This year versus last year been a tale of two tapes, right? Completely different market environments, from volatility, direction, just about any measure you want to use. It's really hard to do with fixed, rigid, traditional automated system development. Machine learning to the rescue. So machine learning is basically enabling computers to think and act like humans would, human traders would, right? You're trying to mimic that process. It sounds impossible, and it used to be impossible, but it's not now, because in part cloud-based capacities and processing power, you can now hook, if you will, integrate massive databases of factors and considerations and market context, and then enable them with the processing capabilities of the cloud to apply. And it doesn't really matter what machine learning technique you use. There's some that are a little bit better than others, and some just plain don't work. But it's becoming commoditized to take the statistically based algorithms that find statistically relevant sound edges. And that is really, really hard to do if you're a human trying to discern between, say, 10 different market factors, right? It's hard enough with 2 or 3. How do you weight them? Do you consider all 3 factors that are part of the criteria? Does it have to be all 3? Can it just be 2 of the 3? Take that and extrapolate it by 100, 200, 300, hundreds of market factors. It's really hard, if not impossible, for a human to do it. But a computer can do it literally in milliseconds. And that's what machine learning does. It takes robust statistical horsepower, best in class, widely accepted mathematical concepts, takes all the data, all these hundreds of different, we actually have almost 1,000 different factors in the database that drives the EQX program, and identifies when there's a directional, clear, statistically based directional bias, either the long side or the short side, or neither. Most of the time it's in between neither. So it overcomes the challenge of traditional automated trading systems by giving you the horsepower to to identify trades and trust those trades and adapt to the changes in market conditions. That's the other part of it. It's not just a one-time thing. It has to be using a data feed, and that's what we do. A data feed is continually updating. We update our data every minute going into the open. I don't know if people realize that. So we can have a signal literally set up. Looks like we're going to have a trade on a given day. Leading into the open, it's updating every minute. And then at the open, just based upon a very subtle nuance that it picked up on exactly where it opened, it'll pass on the trade. So it gives you, in layman's terms, the way I think about it, it's like, what if you had Morad looking over your shoulder, guiding you on what to do on a given day? But then even better than that, what if you asked Morad to invite his five best, most accomplished traders he knows, and that they powwowed and came up with a collective belief of what you should do today on the entry? Are you long or short? What should the target be? What should the stop be? And you took the best synthesized information in their brains at that moment. And you did that over and over and over. They're not going to get them all right. But in my mind, that's what we've attempted to mimic with machine learning. And that's what's certainly possible, and where this is all going long term. And that's how, those returns, we're pretty proud of those returns. We certainly would have loved to have done a little bit better this year so far. But that was only half of a year last year. So these edges work when the markets tend to be volatile. No guarantees, but you've got way more horsepower than what's in my head or Matt's head, or just a few of the best indicators that may have worked in the past in a given market environment.
There's a question here that falls in line with what you're saying. Do you see that in the near future, or in the future, there's going to be any advances towards AI, quote AI and machine learning that could potentially help this industry?
Well, I would argue that's what we're doing right now. I'm very biased, but we honestly, you can check us out. We've been doing, our first machine learning program was built in 2013. So it's been 10 years of building these, and we got the help of Duke University Center for Quantitative Modeling. It's been a slow, hard process, but the tools are finally there to be able to take advantage of unique databases. So the advances in my mind, honestly, have for the most part, in terms of impacting trading automation, the tools are all there. Machine learning and synthesizing data, it's there. It's getting better. but it is there right now. And I think where the changes will evolve will be whoever has the best data. So the data will keep getting better, depending on, and when I say data, I'm talking about market factors, indicators, nuanced information, volume, every indicator you can think of. It's actual state at a given, not only day at the close of a day, but we're going to not only every hour, but as I mentioned, we're doing it. InvestAQuant, we've got just shy of 10 people in our team. We're doing it every minute, and we're moving towards not maybe every second, but we're moving to even greater frequency so we can have the latest, greatest information on exactly what's going on. So how does that help the discretionary trader? I would argue it'll give you better tools. You'll get better signals from signal providers. We provide some. There are others out there. I think you'll get some better guidance that'll hopefully be more robust. But again, I think the biggest advantage for traders in general is diversify. You don't need to do it all yourself.
Yeah.
You can't do it all yourself, right? Maybe you have to work a given day. Maybe you're sick one day.
Yeah. Yeah.
So,
real quickly, so because I want to move on to some questions out there, but real quickly, Scott, benefits or disadvantages, disadvantages. You kind of already went over some advantages of machine learning. Do you see any disadvantages with it, in your opinion?
Yeah, a couple of them come to mind. Obviously, the complexity, right? It takes it out of reach of most people. It makes almost every trader dependent upon third parties, whether it be data feeds or for the entire algorithms themselves, like we create. People don't like that loss of control. Again, I would argue that's an advantage. Trading's way harder than most people realize. To beat the markets consistently over the long term and do it consistently year in and year out, incredibly hard to do from just being a novice trader learning how to trade a given market environment. Other disadvantages, that to me, it's a complexity.
Yeah.
It's a complexity. I don't know, Matt, you have thoughts on that?
Yeah, it's just that the time it takes to learn it and get it up and running, like you said, this for IQ started in 2013. So this has been a long process, and we just finished our second generation of it about a year and a half ago, almost 2 years ago. But I mean, it's been a long process, and for somebody that's just getting into trading, for me at least, that would be completely overwhelming trying to start fresh and learn it.
I do have one, Matt, I thought of, and Max. It is really difficult to trust a black box, right? For us, it's not a black box. It's sort of like an open box. We're looking down, through a glass top. We know exactly what factors are being considered, and there are constraints and levers, if you imagine, that you're turning on and enabling and turning off and giving it boundaries, especially when it comes to risk. And we share that. We're happy to talk, and I know you guys do as well, the risk elements, but without understanding exactly how it's choosing what's most important, that's hard for people to trust that. And it's easy when it's making money, but when it's not making money, you have to trust sort of the people that built it, frankly. And that's hard to do. You don't know me.
Yeah.
You don't know Matt. And I guess the other negative is sometime in highly nuanced situations, if something's only happened, and I know all the pundits love to talk about, the last 8 Fed days, something. I mean, that's not even statistically meaningful, even remotely. Yet people throw around these small sample sizes. I will say, though, that is a limitation of machine learning. It cannot handle situations that have only happened 10 times. It's not going to give you anything that you can trust.
I was actually going to ask if one of the disadvantages would be you're waiting for the machine learning, like basically the infrastructure and technology to catch up to be able to process more data points at some point. I mean, you guys have been doing this for a while, so I imagine maybe at some point what you wanted to get out of what you were creating, machine learning wasn't quite there yet, or able to do it fast enough for you. I mean, I might be wrong there too, but.
Well, that's where we were until about 2 years ago.
Yeah.
For sure. And it took us 2 years to get our first machine learning only auto trading program. We launched it in fall of 2021, but it was a 2-year project, just shy of 2 years. And we had to use some expensive third-party resources to get it built and make sure it was done properly.
Yeah.
And that's 2 years with a team working on it full time. That's not just
a lot.
a regular guy trying to become a trader doing it.
Yeah.
Yeah, it wasn't just me by any means. I'm just a spokesperson. So,
well, thanks for that. Well, just real quickly before we get into just the quick giveaway and then a couple questions. If you are looking to get started with EdgeCair, potentially running automated systems with us, visit myed.ge/open, start an application process. You can also call us. Phone numbers in the bottom left-hand corner. You'll need a fund with the suggested minimum, and then we'll explain to you how to get everything up and running. So again, that's myed.ge/open, or just contact one of our personal brokers and they'll be able to get you up and running. So real quickly, because we're running out of time and I want to get to some of these questions, keep your ears to the ground. EdgeCair is looking to launch some new products in the future. So the giveaway today is access to an upcoming quant-based system, which is valued at $990. And we're going to do a quick spin of the wheel that we always do. Real quickly, the anticipation killing me. The winner is Steven. So Steven, we will be in touch. So, questions. There's a few in here. One of which was, so this is a long-term process. I'm a day trader. Does this make sense for day trading, or is it too slow for that periodicity? I would say, I could kind of help you with that, James. Our specific, there's some systems, some programs out there that you may find and you may look into that may trade more than others. EdgeQX itself, if it trades in the morning and it's out and it's out at the end of the day, it's not a buy multiple times a day, sell multiple times a day program. So it's a bit different in terms of day trading itself. But for yourself, compared to day trading for your own personal account, I would say they're kind of very different. But day trading a system is something we probably wouldn't recommend.
Yeah, and to add on to what Max is saying, and plus, like Scott and Matt said, to go out and do this development on yourself, right, at the level that they're doing it would be a long, long process. Now, like Max said, the program is an intraday program, right? So it is doing it in what you would call day trading. It's just not doing it discretionarily. There's the machine learning component to it. So definitely a long process, like Scott and Matt said, as far as developing something that could do that for you, basically.
Here's one for you, Scott and Matt. For someone who may not be a programmer, what are the prospects for non-programmers using an AI tool in Excel? Is there something that you can...
Well, in Excel is the tricky part. I have no idea what Microsoft's plans are. There's some pretty cool advances out there. I don't even want to ponder. I've seen some things that there's sites out there that you can tell it what you want it. You can say what you want it to code, and it'll generate the code for you and create a strategy as certain profiles. That's what many in this industry where they think it's going, but it still doesn't overcome. It takes market knowledge and designing a system with the right construct for the right environment. I just don't see it. Trading is so personalized in terms of what people want out of a trading program: win rates, profit expectancy, average loss, maximum loss, funding available. I think we're a long ways away from the non-coder being able to do something like, what do they call it? Chat-based, generative AI. But who knows?
Yeah. Have you ever, in your experience developing systems, have you ever built anything around pairs trading? Pairs of futures that are strictly correlated? Have you ever looked into something like that?
We have not. We have many friends across the pond who ask us about that, but no, I haven't.
How do you account for slippage?
We build it into every single transaction. And first off, we build real numbers and we measure it closely.
Yeah.
We measure hypothetical entry levels, and then we track our actual performance and we adjust accordingly. In fact, that project you were talking about that we're working on, we have bumped it a little bit because we've seen slippage has gone up a little bit as the volumes have gotten bigger.
Yeah, and for our EdgeQX program, that's live data in there, so the slippage is accounted for. We take
as are the license fee, which we didn't mention.
Fees,
Yep.
commissions, exchange fees.
Yeah, that slide has all of the cost factors on it included. So
you can find more information on that at edgeqx.com. Review all the performance and assumptions. You can kind of get a full overview of that. But those programs are allocated through an APS system, average price system. So every customer receives the same trade. So it accounts for the slippage in that sense.
And just so you're aware, if slippage ever became an issue to where it's degrading our performance in a manner that's not expected, like whenever you trade size in a program, you do expect slippage. You have to account for that coming into it. If it ever gets to a point that exceeds the thresholds that we're willing to accept, then the programs that we trade, we don't allow anybody else into them. People will naturally start coming out of them, and that'll free up some liquidity. But there comes a point where it'll hit what the limits of what we think is acceptable to be able to still have a strong edge and still be able to trade it. And when that happens, then we'll pause it to new people. We won't let that eat it up.
Nice.
Well, I think we got time for one more question, and I'm going to end it on a good one. All institutions and brokers use algos to execute their orders now, but do you think there will be a day when human discretionary trading will not be possible?
I wouldn't think so, because my guess is find people like you guys and would say, wait a second.
Yeah. Well, yeah.
Follow the dollar.
Comment on that. Listen, I feel like, in the world of high frequency trading, it may be harder for some individuals, but I don't think discretionary trading is ever going to go away. I mean, I always like to say, if you're a professional trader, you are a discretionary, newbie, quote newbie, active trader at one point in your life. So you don't just go from 0 to 100 immediately. There's a learning curve. So at some point you're learning, and you gotta make mistakes to become a professional.
Yeah, even if that's just testing out ideas or whatever it is, right? If you never plan to click in your own discretionary trade in your life and you just want to go fully automated from the get-go, you still have ideas in your head that you need to test out in some way, and those are your ideas. So and then of course you throw in a machine learning component. But I agree with Max. I think there's always going to be a place for discretionary trading. Even right now, your job as a discretionary trader is, as Morad would say, to ride that wave, and that wave probably contains a lot of machines as well. So yeah.
Awesome. Well, I know we gotta cut it out, and it was a fantastic webinar, and thank you guys for joining us yet again, and it's always a pleasure to have you.
Thanks, guys.
Yep,
Thanks, guys.
Thank you. Good luck, everyone.
Cheers. Good luck, everyone.